Hi and welcome. So today's video is all about Motilal Oswal Nifty India Defense Index Fund, which is being talked about these days. There is a new fund offer which has been released, which you would be aware of, which is being talked about as it is a new offering, and there are some good returns that it has been talking about. So in today's video, we'll be talking a lot about that. There is a detailed sheet I have computed for all the stocks which are available in there. These are the 15 stocks, so I have computed some details around that. I'll share the sheet with you towards the end of the video as well, and also we will look at how this fund can add value to your portfolio and add to your returns. So last 1 year this has given quite a bit of returns in terms of long-term performance. In year 2024 itself, it has given a 59% of return, if you really see, right? And in 23 it has given 91.1% return, 66.8% return in the year previous to that, and likewise it has given some good returns all over, right? So 1 year return, if you see it is saying 198%. We will also look at the actuals as of today, how it is doing that, and it also gives you a split between small cap, mid cap and large cap. So that ways you will have a split of all these three mutual funds in your portfolio. So when was this fund new fund offer started? 13 June, closes on 24th. Anything changes? I don't think. If you want, you can invest in this. Otherwise, you can always do a SIP later on as well. Whenever you choose to do so, we will see what all things you need to consider. So let's see what all they are claiming. And again, before this, there was just another mutual fund by HDFC, which also used to give a similar kind of index exposure, which was to the HDFC index fund. And if we were to talk about what they are tracking this, which is the Nifty India Defense Index. It was released in 2018 with a base value of 1000, and that's a quick fact sheet about this index fund from the indexogram of Nifty India, the NSE website, obviously, right? And it has talked about all the details of over here. We'll look at all of these in detail. So let's start with this flyer for the Motilal Oswal Nifty Defense Index. So the 5-year CAGR has been of 55%, which is humongous. I mean, if you are able to generate even 50% of that beats almost every other fund in the market. So yes, definitely something to look at. It gives you pure exposure to defense stocks. And why is defense stocks being so much important these days? We'll talk about that. In fact, they have given out a detailed presentation which talks about all these details. We'll try to look at that in short as well. Top sectors that the index exposes to is 86% industrial exposure, 14% commodities. Doesn't tell us much, but let's look at what are the typical SIP returns. If we did an SIP in this for last 1 year, you would have invested 1,20,000. If you did a SIP of 10k per month, the market value of that today would have been 2.27 lakhs, almost double. For 3 years, 3,60,000 is what you would have invested. 12.8 lakhs is what it would have become. Over 5 years, 6 lakh is what you would have invested, and 35.5 lakhs is what it would have become at a CAGR of or XIRR of 77.5%. Right? What is the minimum SIP that you can do? 500 rupees, and then in multiples of rupee 1, so 501, 502, any amount you can do SIP of in this. What is the investment objective? Investment objective is to provide returns that before expenses correspond to the total returns of the Nifty India Defense Total Return Index, which we just looked at, right? Swapnil Mayekar is the fund manager, and total expense ratio is not yet announced. Take a look at the total expense ratio whenever it is announced, because the total expense ratio of the HDFC fund is quite high, 0.74 or 0.74% for direct, and in case you fall in prey to a agent and do through them, it would be a 1.95%. 1.21% would be going directly to your agent in that case. Coming back, let's go to the detailed presentation that is over here that Motilal Oswal has provided for this new fund offer. So, what are the reasons for this? The global military expenditure is obviously on the rise. Over the last 10 years, it has grown by 3%. Over the last 1 year, it has grown by 20%, sharpest increase. Right? Why do we need to have defense spending? To maintain peace, obviously. Whenever there is an increase in conflict, we need to counter that, and any geopolitical tension which is there in our geographies for that as well. Obviously, India is fourth in the terms of expenses that countries do. US is the highest, spending $916 billion. India invests $84 billion in its defense. So there is a huge potential to have an increase in that. From an India budget perspective, the India's budget towards defense has been increasing by almost a 10% of CAGR over last 12 years, if I can say, from FY14 till now, almost 10 years. Yeah, and budget allocation towards defense has been increasing, and the intent towards Make in India is also increasing. And there are few case studies over here we'll talk about, where it is talked about how Make in India is also helping the defense industry. So this is a Nomura defense sector report. In the above graph, it has explained basically how we have been major importer. So total import of 9.8 billion is what we did in 2019 to 23. So Russia contributes around 36%, France 33%, US 13%. All right, doesn't tell us much. So key growth drivers is the Atmanirbhar initiative, obviously, of Indian government, wherein we have been creating opportunities within the Indian defense players itself to build these kind of missiles, aircrafts, and things like that. And we have also been able to export quite a lot of it. Our defense exports grew by a whopping 334% over the last 5 years to 75 countries, and our aim is to reduce the imports by 70% with the indigenous products. And there are indigenous products like all of these: Tejas, Chetak, Dhruv, Atulya, lightweight laser designator, the drone detector, all of these made by Indian companies, HAL, BEL. We'll just look at all of those. Mazagon Dock from the Navy perspective, Cochin Shipyard from again the Navy perspective, MTAR is from again the aviation perspective for helicopter equipments, right? And data patterns again for the radar systems for aviation, and low level radar tracking systems again for aviation. So all of these companies are building stuff for aviation or navy or ground forces. Comparison with US's leading defense companies, US defense companies revenue have been growing at a 5% CAGR comparison between US defense and revenue of US and Indian defense companies. So that's pretty low as of now, and obviously it is bound to increase with all this Make in India initiative. And in terms of details, exit load is just 1% if it is redeemed before 15 days, and nil thereafter. So that ways, if you keep it for 15 days, after that you can just get rid of it if you want to, without any exit clauses. These are the top 10 constituents: HAL, BEL, Solar Industries, Bharat Dynamics, Cochin Shipyard, Mazagon Dock. We just looked at what kind of products they are creating. In terms of the sectors it covers, industrial sector is 86, commodities is 13.7, large, mid, small cap. That's the split. So you get exposure to all of these three, comparing to Nifty 50 versus Nifty Defense TRI. Over the last 3 years, almost since June 22, you see a sharp increase in the Nifty India Defense Index compared to the Nifty. So there is a huge potential, it seems. Calendar year performance, we already saw that. Also the risk profile of this. So last 1 year return is 177%. For Nifty 50 it was 23%. And comparing the volatility, for Nifty 50 it was 10.1, 26.2 for Nifty Defense. And if we were to look at like risk adjusted returns, so still it was much better for Defense Index, which was 6.8 versus 2.3 for Nifty 50 index, and same is true for 3 years and 5 years time frames as well. So looks good in the long term, promising a good value of returns. These are the kind of returns, and in my sheet I have actually created a detailed calculation, so at any point you can see live valuation of each of these as well. These are the kind of PE ratios, price to equity ratios, price to book ratios for each of both of these, and the dividend yield as well. Key takeaways from this: India's defense sector is expected to obviously grow at a quite humongous rate. There are geopolitical tensions, and India's focus on self-reliance is going to fuel this industry. Government is going to focus on building a country-to-country relations to promote export. So the political scenario is also in support. Atmanirbhar initiative, which was from the previous government, is still in power, so that makes still a good case for all of this. Looking at few other details. Okay, this is the detailed offer document. Let's not look at that. This is the HDFC Defense Fund, which was rolled out around June of 2023. Over the last less than 1 year, it has given almost a year. It has given a 134% of returns. So yeah, definitely looks good. There are some red flags as per ticker tape, but these red flags are all only amongst the bottom 3 companies, if I remember correctly. So these are the red flag companies that we were talking about. These are hardly holding weight of 1.7%, so need not worry about that part. So yeah, again, why I'm showing the HDFC Defense Fund when we talk about Motilal Oswal index, because essentially both are tracking the same Nifty index, which is the Nifty India Defense, so it doesn't really matter. Some percentage here and there may be different because the rebalancing happens twice, once in March and once in September for each of these funds. So that ways you need not worry about why HDFC Defense Funds won't be able to give some inputs on Motilal Oswal index funds. Only if the expense ratio is much lesser, it makes a great point to invest in the Motilal Oswal fund. Again makes sense to also look at the flyer of HDFC Defense Fund because of the narrative that they would have given for the kind of self-sustenance within the defense sector. So all this data around self-reliance, we can see these keywords: critical for defense readiness, we are aiding export growth, increasing capex in defense, increasing contribution from the budget towards that. Export growth is going to happen. Growth of defense ecosystem within India is also happening, and all of this is going to make it more and more better. All right. So going back to the Motilal Oswal website, I think we have covered almost everything from this. Now, one last thing that I wanted to give to you is this sheet, in which I have calculated a basic sheet where all these tickers, the 15 components of the index, their weights. Again, the specific weights of last 5 are not specified, so I have assumed like equal weights for each of these. Doesn't make too much of a difference, I believe. So based on that, we have like one. So this yellow field is all you need to change. Whenever you get it, just make a copy of this sheet, go to the files, make a copy, and then you'll be able to edit it. All right, let me minimize this one again. And all right, so this one is 162% for 1 year return. If you see, if you would make it like 2 years, it would change the details over the top, and you would see how much return over the last 2 years it has given. 3 years is again 93.3%. So that is the kind of returns you are getting over here. And yeah, I think this needs to be changed. These are static values actually, which I've copied right from here. So these change with days and months of the year. So 4 years would be this much, 5 years would be again how much, 56.17. So let me do this. 8 years again is what? So essentially, if you see, what I'm doing is this field is today minus 365 into the number of years we are talking about. So 8 years is into 8. So we are going back to 21st of June 2016. This was the price for each of these, and then we have taken a weighted average of this, and between this and this we have taken a rate formula, wherein we are taking this as the current value and this as the final value, and the number of years is 8, So if you go into this formula, that is how it looks like. All right, number of periods is 8 over here. Payment per period is nil. Present value at 8 years ago was 361. Future value now is 3494. Both of these being the weighted average, and based on that we get the return percentage for these years, right? And if you were to look at like 15 years of return, so 15 years of return was 18.54. Again, each of these is much better than what you would expect in any other index. Last 20 years also, all of these stocks, good thing is that all of these stocks have been there for last 20 years, or maybe is 30 years, maybe let us check. It seems they have been there for last 30 years as well. So 30 years data is not so promising. At least 25 years, maybe let us look at it. 25 years data is 10.8% in returns. So maybe it didn't grow in the initial 5-10 years, but now as the government policies are getting better and better for last 5 years, you can see this is the kind of rate of return we are getting. So that makes all the reason for us to look at investing in this. These are the PE ratios. Obviously, all of these will change because these are coming from Google Finance directly. Whenever you look at it, it would be the latest data that you would be looking at. And yeah, all right, so these are the weights over here. I think something changed. Okay, not sure what. All right, so yeah, maybe we could make this 3 and that should make it correct. So yeah, these are the weights of each of these indices. All right, ignore the errors. We'll look at what is causing the error over here, but yeah, shouldn't be a big concern. We can just hide this for now because we are not considering any weight. So this gives you a 250 days of chart for each of these stocks. In case that matters, over the last 1 day, what changes has happened. Paras Defense obviously has increased by 3.2% today. Rest of them have gone down today. Ignore the dollars over here. They should be in rupees, all of these. All right, so yeah, this is how it looks like from the 5-day return perspective, from a 10-day return perspective, and in case you want to do it slightly more, maybe a 30-day return, that is also exactly what you would be able to get over here. All right, I think this is where you would need to change it. So yeah, 30-day return is what you would be getting over here. So yeah, all right. So yeah, that is exactly what I wanted to show in this video. Hope you found it useful. And all right, maybe my final verdict on whether I would want you to invest in this or not. All of the things that we have seen so far look positive, and I don't see any big red flags in terms of investing in this index. Obviously, you should not go all into the index, but yeah, this could be like one of the 4 or 5 SIPs that you're doing monthly. You can very well start this as an investment portfolio yourself. I would surely be adding it to my portfolio as well. All right, with that, I'll take a leave, and thank you for watching.